Welcome to the Durham College Student Academic Learning Services introductory video to the accounting equation. In this video, we are going to talk about what the accounting equation is, describe the account types that compose it, and introduce some of the named accounts of each account type. Let's begin. The accounting equation describes the relationship between a company's assets, liabilities, and equity. Another way of thinking about the accounting equation is that it describes what the company has and why they have it. Because it is actually a mathematical equation, there are some things we know must be true. The equation must always balance. What this means is that if there is change on one side of the equation, there must be equal change on the other side in the same direction. So if one side of the equation goes up, the other side must also go up. If one side of the equation goes down, the other side must also go down. When there is change, it does not have to be on both sides of the equal sign. A change can occur on only one side, left side or right side, as long as there is another change of the same amount but opposite in direction. Before we continue exploring the accounting equation, it's very helpful to talk about equity in more detail. The term equity does not describe a single type of thing. It is actually a combination of 4 different things. Equity is a combination of the following account types: capital, withdrawals, revenues, and expenses. It is often helpful to describe account types that make up the accounting equation in simpler everyday terms. Later, this will help you to analyze a financial event and choose the appropriate named accounts needed to record that event. Assets can be thought of as things the company owns. Liabilities are things that the company owes. Capital represents what the owner gives to the company. Withdrawals represent what the owner takes from the company. Revenues are what the company earns by doing work. And expenses are what the company uses when doing that work. The accounting equation can be rewritten like this. Although longer, this expanded version of the accounting equation will be helpful when learning about debits and credits. It is extremely useful to become familiar with the more commonly used named accounts. Some common asset account names are cash, accounts receivable, supplies, and prepaid rent. Note that any account with the words prepaid or receivable in its name is an asset account. Some common liability account names include accounts payable, notes payable, utilities payable, and unearned revenue. Note that liability accounts typically have the word payable as part of their name. However, any account with the word unearned as part of its name is also a liability account. There is only one named capital account, and that will be the name of the owner followed by the word capital. Similarly, there is only one named withdrawals account, and that will be the name of the owner followed by the word withdrawals. Some common revenue account names are fees earned, service revenue, and interest earned. Named revenue accounts typically have the word earned as part of their name after a brief description of what type of work was done. For example, haircutting fees earned. Some common expense account names include salaries expense, wages expense, hydro expense, and rent expense. Note that any account with the word expense as part of its name is an expense account. Each type of account has an expected balance, either debit or credit. This is determined by whichever causes the account type to increase. Watch our introductory video on debits and credits to learn how different account types change with either debits or credits. That brings us to the end of this video on the accounting equation. Be sure to watch our other accounting videos to learn about debits and credits and how they work to change the accounting equation. If you have any questions about this material, I encourage you to come to the SALS Center located in room 204 of the Student Services Building and make an appointment with the appropriate learning skills advisor. Thanks for watching.